Welcome back to the Forex Lounge Fundamental Extras. Today is Thursday, April 8th, 2010. Welcome back, one and all. Great you could join us. Well, Bloomberg.com today reports two very key pieces of information. Number one, the Bank of England kept its bond purchase program unchanged for a third month as it tries to sustain the economy's recovery from the deepest recession since World War II. The Monetary Policy Committee, led by Governor Mervyn King, held the target for its asset buying plan to £200 billion today, as predicted by all 36 economists in a Bloomberg News survey. The bank, which didn't comment on the economy or the outlook for policy, also kept its benchmark interest rate at a record low of 0.5%, and that was as expected, unchanged at 0.5% interest rates in the UK. Now, in the European Union, the European Central Bank left interest rates at a record low as the Greek fiscal crisis complicates its withdrawal from emergency stimulus measures. The Frankfurt-based ECB, European Central Bank, kept its benchmark interest rate at 1%, as predicted by all 62 economists in a Bloomberg News survey. A separate poll shows that the rate may stay there until the first quarter of next year. President Jean-Claude Trichet has already announced changes to the ECB collateral rules to help Greece as it struggles to finance its debt. So to reiterate again, the Bank of England keeps interest rates unchanged at 0.5% as expected, and the Bank of England, well, that was Bank of England at 0.5%. European Central Bank keeps rates unchanged at 1%, and that was also as expected. Now what we're looking at is the European Central Bank interest rate history going back to 1999. And the blue line represents European Central Bank current rates, again at 1%, no change. The violet line represents a 12-month moving average. Now we do not have a tremendous amount of historical data on the European Central Bank interest rate history because of the inception of the euro only going back to 99-2000. However, we can see that interest rates have remained unchanged since the Bank of England had cut them very, very aggressively going back to 2009. And so far, no change in that. Now, over the long term, we can see the influence of the European Central Bank interest rate history to the equity market, specifically the violet line, that's the DAX, and the green line, that's the CAC around 40. So, as interest rates were cut dramatically, starting again going back to 2008, well, the equity markets certainly went down as well. Equity markets finally hit a bottom going back to February, March of 2009 and started to rally to the upside. Interest rates so far have remained unchanged at 1%. If we see equity markets really continue to rise, that would indicate the economy is showing quite a bit of strength, especially if the equity markets are able to take out their recent swing highs, and that may lead us to believe that the European Central Bank will raise rates further. Not really the case quite yet. Now, a little bit more interesting is the Bank of England keeping rates unchanged, also at 0.5%. That was as expected. The blue line is the Bank of England interest rate history. Going all the way back to 1998, we can see interest rates in the UK were quite high, up at 7.5%. And we are still trending below or very, very close to now its own 12-month average, and we have not lifted yet in interest rates, just like the European Central Bank. However, take a look at the correlation between the Bank of England interest rate policy and the FTSE, which is the equity market in the UK. The Bank of England interest rate history is a violet line. The blue line represents the FTSE. Typically, as the economy in the UK tends to go through good periods, prosperous periods, well, the Bank of England will raise rates and the FTSE will appreciate. During bad times, the FTSE moves down, and so does the Bank of England interest rate. Now, so far, the FTSE, like the CAC and like the DAC, or the DAX in the European Union, we can see that FTSE has also rallied nicely off of the lows that were established going back to February, March of 2009. So far, interest rates have not changed. So if we really see the FTSE continue to rise, especially taking out the former highs going back to October '07, it would logically indicate that, well, the economy in the UK is a lot better and we may expect the Bank of England to raise rates. Not really the case quite yet. Have a look at the influence over the Bank of England interest rates, that's the blue line, to the pound-dollar currency pair, that's the violet line. The anticipation or the expectation of higher rates tends to lead us to buy pounds, and the pound dollar and other pound pairs go up during times when the Bank of England cuts rates and the economy, or I should say the worldwide economy, expects the Bank of England to cut rates. We can see the pound dollar goes down as well. If we see the pound dollar really start to rally, moving back to the levels of 2007, that may indicate that we're closer to an interest rate hike. However, not really the case quite yet. So far, there's very little expectation, I think, that the Bank of England or the European Central Bank will raise rates anytime soon. Like Bloomberg said, many economists do not expect the European Central Bank, at least for that matter, to raise rates until maybe the first quarter of next year. Finally, we consider all the different currencies together. Now, the Bank of England is indicated by the orange line at 0.5%, the European Central Bank, the light blue line at 1%. So far, none of these central banks have raised rates. The green line is Bank of Canada, yellow line Bank of Japan, the dark brown or black line is the Federal Reserve in the U.S., the kiwi is a red line, Reserve Bank of New Zealand, I should say, and the Reserve Bank of Australia, the only central bank to raise rates actually a few days ago to 4.25%, has separated from the pack. So far, we don't see any other central banks raising rates other than Australia, and not even anytime soon expected by most. However, as that anticipation turns and as the market starts to think that, well, we'll see higher rates in a currency or an economy outside of Australia, I think you'll see that respective currency really start to appreciate. With that said, if you have any questions, do not hesitate to email us anytime, info@forexlounge.com. We thank you for joining us. We wish you a great day, all profitable trades, and we look forward to seeing you back soon. Back inside the Forex Lounge.